Futures Radio Show, sponsored by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world effectively manage risk. For access to free educational tools and resources for the active individual trader, please visit activetrader.cmegroup.com.
Every day, traders and investors dive in to tackle the ever-changing markets to find opportunity. Futures Radio Show is your number one source for answers to the questions that all market participants want to ask. Veteran futures trader Anthony Crudele sits down with the most influential leaders and top traders in the industry. Now, here's your host, Anthony Crudele.
Hey everybody, thanks for tuning in for this episode with Scott San Emeterio. Remember, new shows are posted on Mondays and Thursdays. You can subscribe to the show on iTunes and YouTube. If you're enjoying the show, please leave a review on iTunes. Before I play today's interview for you, I want to give a shout out to the great sponsors of Futures Radio Show: CME Group, Trading Technologies, RJO Futures, and Top Step Trader. To learn more about these sponsors and the important things they are doing for futures traders, be sure to click on their logos on our website. Today I spoke with the CEO of BallStreet Trading, Scott San Emeterio. We talked about his background as a prop trader and professional poker player. He compares trading to poker and explains to us what BallStreet Trading is and why he started it. We talked about how traders can go through BallStreet Trading to trade sporting events, such as the NCAA tournament and the Masters. So without further ado, let me take you right to the interview with Scott. I was reading about you. I mean, you started your career trading equities at the New York Stock Exchange on a prop desk. I think it was like 2001, which is a pretty volatile year at the beginning of your first year of trading. And then you took a year off to play poker professionally, then spent 13 years at Credit Suisse in fixed income, and now you're the CEO of BallStreet Trading. So just talk to us a little bit about your background.
Yeah, it feels like I'm living a lot of different lives here. Looking back now, like you're spot on with 2001. I graduated from undergrad in 2001, and while I was in school, this is during the 90s and the big internet boom. So I have all my friends who are older than me getting these jobs on these prop desks, making hundreds of thousands of dollars a year right out of school. So obviously, I'm reaching out to them, guys, I need to get on this desk. I need to get on this desk. So finally, when I graduate, one of my buddies says, I have a spot for you. All you need to do is go get all of your licenses. So I spent the summer of 2001 getting my 7, my 63, my 55, all that fun stuff, getting ready to start trading that fall. And then 9/11 happens. So with that, all of the invitations that they were giving out to people to join these desks all got pulled away. Spent a couple months then trying to find another home to do this. I had spent, all summer really getting pumped about being able to trade. And another friend of mine, his brother, was actually doing the same type of thing, and he invited me up onto his desk, where I spent then almost a year trading, different New York Stock Exchange stocks, and it was both the best and worst experience ever. I made zero money, but it was probably the most fun I ever had working in finance. Every single day when that bell rings was a new day, and you just have so much excitement and so much optimism about what could potentially happen out there. After I rolled off of that for a little while, this is also now early 2000s, so the poker boom is going on, and I loved playing poker. And I was the guy who was on Party Poker and had 2 screens in my apartment with 4 or 5 tables on each screen, and began playing that as much as I could. Was starting to make some real money doing all of that, and at around the same time as online poker begins to fall apart a little bit, another group of buddies of mine were all working at Credit Suisse, working on the mortgage desk there. So this is now 2005, 2006, to where I step over into Credit Suisse and drop myself right into the subprime, the asset-backed security boom that was about to take place. This is literally one of my first assignments at Credit Suisse, was dealing with all of the long contracts for all of the pay-as-you-go stuff. So for anybody who saw or read The Big Short, this was the thing that Christian Bale was getting basically Goldman Sachs to do, to write him those contracts. So this is, like I said, 2005, 2006. I'm dropped right off into this to watch the rise and then be on the subprime desk at Credit Suisse as this whole thing begins to collapse in 2007 through 2010. So for me, I got that front row seat to this chaos of what was going on in the markets, and really got a lot of lessons on how this industry is, and got a chance to, for good or bad, be able to have some perspective on what I really want to do going forward with.
Yeah, it's extremely interesting, your background, because you went from prop trading to poker to then going back during another really busy time. You seem to keep going back when the times get really busy. And one thing that I'm curious about, because obviously we're going to talk a lot about BallStreet Trading today, is how much you compare poker to trading.
Yeah, I think they're really, really similar, because in poker, and the biggest thing that I really loved about poker was that I always felt I had total control. And the same with trading, where you have control whether you're going to get into a position, whether you're going to get out of a position, or the strategy for which different things set you up to take that risk. One of the biggest things I think that poker has taught me over the years is bankroll management. So if that skill alone, if you're able to master that, could take you really far, I think, on the trading side of things. It's really about risk management, and it's really about understanding exactly where you have advantages and where certain things are being presented to you, whether it's on the table and you see a draw that you might want to play against a specific opponent, or you see a setup in a stock that you say, the probability of this stock either going up on my long or going down on my short is just too much to overlook, and this is what they call a plus EV moment, and you need to take advantage of it.
I want to talk about BallStreet Trading now. Explain to everybody what it is.
Yeah, so BallStreet Trading is a real-time prediction market that creates the ability for players to day trade live win probability for people as they're watching live events. So basically, our markets will be set up for an individual game where we'll have two teams playing against each other. So you have the Knicks versus the Bulls. Our markets will trade based off win probability, so they'll trade from 0 to 100. So just like a binary option, at the end of the game, the winning team shares will expire at 100, the losing team shares will expire at 0. At the start of that contest, at the start of that game, every player will start with a portfolio of assets. We're going to give you 100 shares of the Knicks, we're going to give you 100 shares of the Bulls, and we're going to give you $2,000 in virtual currency. So much like in a poker tournament that everyone starts with the same amount of chips, in our contest, everyone starts with the same portfolio. And now it's up to every player in the market to buy and sell shares of those teams based on the likelihood that they're going to win the actual game. So as the Knicks go up by 15 points, you're obviously going to see that price begin to rise, because more people will perceive that the Knicks are going to win that game and want to ultimately cash out at that 100 value that will be given to those shares at the end of the game if they end up winning. With sports as the backdrop, any game that has lots of volatility or scores going back and forth, you can see that market move 10, 20, 30, 40%, in only a couple of minutes. What makes our platform unique, beyond the fact that everything's in real time, is that the buying and selling is what's driving the price. So it's only the players in the market that are driving whether that price goes up or that price goes down. We've created technology that runs a pricer on a loop. So basically we're taking a snapshot in a very small duration, something like 30 seconds, where we'll basically take the number of buyers in the market, the number of sellers, net them together, run it through our algorithm to create that delta in price. So more buyers, price goes up; more sellers, price goes down.
Many questions I have for this. First of all, I love the idea, and I probably should, before I get into all the questions I have about it, how did you come up with this idea?
Yeah, so I think it goes back to the seeds that were always in my head about wanting control over things. And I think that part of the frustration with conventional gambling, and admittedly, people are not, but I'm not really a big gambler when it comes on sports, because I feel like I don't have control. I think that's why I always gravitated towards poker. So the idea of how do I give myself the ability to still enjoy an NFL game, have some action on it, so to speak, and be able to identify that I think the Jets look great this afternoon and they might actually be a buy, versus I think that the Patriots actually might lose because X, Y, and Z happened in the game and I want to get short them. So it was those seeds that really began to grow the concept. And it was also a combination of thinking, how do we disrupt the gaming industry in the sense of, the spreads people are playing on those bets compared to how we think of spreads in the financial markets. They're crazy. You're paying -110, -115 to bet with DraftKings, and that's 15% spread, which is insane if you think about the spread you would pay on a stock, right? So it was all of these different things. How do we create a game where it could be peer versus peer? Because I think that in the future, everything will eventually get to a peer versus peer, and really a decentralized version of what we see today from a conventional sports book. And everything is clearly going into real time. So the fact that we can take those aspects of it and put it on a market, because I genuinely do believe that markets are efficient when run properly, and markets will get the most value for everyone who's involved with it. It really set the stage for how we began to construct the idea around BallStreet. The very first version of BallStreet that we put out there, we ran a couple contests for a Super Bowl a couple of years ago, and we did it for the Masters a number of years ago, was a literal auction style market where players had to put bids and offers in on both sides of the market. And basically, we created a book. And people came back and said, we love this concept, but it's really complicated and it's kind of distracting when you're watching the game, because I can't worry about buying the Jets after I put a $50 bid in when someone just front runs me and puts $50.05. And I can't really keep up with all of that stuff that's going on. So part of what we've been doing over the past couple of years is really simplifying and creating as approachable concept as possible to really make it inviting for both people who are familiar with financial markets, as well as those casual, more recreational fans who might not really understand every nuance of trading a stock, right? So what we've done is really focus on the game aspect of it and really try to create an arcade version of Robinhood or an E-Trade or something you might even see on Bloomberg. So when people come onto our platform for the first time, whether they're an experienced trader or they're a sports bettor or someone who just thinks it's kind of an interesting game and they want to check us out, we hope that the feel that they get is more of this is a video game first that is actually a live market behind it. And the decision making that you have to make is actually pretty simplified to where we're only really asking you, are you a buyer or are you a seller? And that's really the only decision you have to make, which we think removes a lot of the decision making and gives players the ability to engage with the app, but also really enjoy the experience of watching the event.
Many questions. First one is this classified as stocks? Is it just classified as gambling? Like if you go in and you make a bunch of money, how does the government look at you?
Yeah, so one of the things that we have to be conscious of living here in the United States is both securities rules and, to your point, gaming rules. So as far as when we talk about the structure of how we've created this is we've created a tournament structure. So you're not literally buying shares of the Jets for $26 and then selling them at $36 because they have a 10-0 lead at halftime. That would be basically a futures contract that we would create where the CFTC would have issue with us. So what we've done is create the tournament structure where everything's virtual, and all we're simply doing is allowing people to trade against each other and measuring them based on the P&L that they're able to derive from their trading activity. So that removes us away from any issues from a financial standpoint. From a gaming standpoint, we're not taking any wagers from anyone, so you're not necessarily betting on any outcome. We've created our program of removing any and all chance from the platform. So it's not simply a format where if you think the Patriots are going to win, that you can come in, buy the Patriots, watch the game, Patriots win, and you're going to win money. The market's all in real time, so everything is always fluid and moving. So you need to be engaged for most of the game to ensure that you're always buying and selling at the right times. Because if you go in, buy the Patriots at $60 at the beginning of the game, and then they open the game down 20-0. Well, guess what's going to happen to the Patriots score? Or the Patriot price is going to begin to fall to where now maybe they're trading at $30. So someone else comes in at that point, buys those shares for $30. Patriots come back and win. Well, their weighted average price for those Patriot shares is much less than yours who bought at the beginning of the game. So their P&L by default will be much higher. So by carving out all of those little nuances, we begin to back ourselves away from the gaming and gambling definition. The biggest one that we're going forward with is we're going to be a completely free-to-play platform, and we're going to look to partner with big brands to use us as an engagement tool and offer incentives through prize pools, promotions, and other interesting ways that we can get people onto the platform so that they can enjoy both the experience of playing the game as well as have those prizes there waiting for them if they're able to be successful on it.
All right, just so I'm totally clear on this, it sounds to me as if though you're saying it's trader to trader, right? So you're matching a buyer with a seller through the market, through the app. Now, what if there are no sellers? I mean, look at the first round of Duke. Duke's one of my favorite college basketball teams. I can't imagine anybody wanting to sell them short in the first round. So what if there are no sellers? Is there just no market, or are you guys providing liquidity for the traders?
So yes and no. So with the example with Duke, let's take their first round game in this year's tournament. Obviously, they're going to open up as a huge favorite. So what we do is we're going to IPO that game. So the likelihood of that IPO price will probably be Duke opens up at $95, and whomever they end up playing will open up at $5. So we're basically inviting anyone who wants to buy that underdog 20-1 by buying those shares at 5. So that's how we create incentive for people to potentially bet against Duke, so to speak, or buy shares of the other team. As far as the true liquidity is, what we've done by simplifying the market is we've created basically a market maker algorithm to where we are offering indicative levels where we will show you a bid and an offer, and it will be up to you whether you want to buy or sell at that particular level. After we do our calculations for that time block, we'll create a new price set where we'll have a new offer and a new bid. So you're basically buying and selling into us. We have no incentive in the market. We're just there basically as a liquidity provider to ensure that there's always an open market. Now, again, if someone comes in and wants to sell all of their shares of that underdog team when they start, well, again, that trade will, or that those shares will begin to trade themselves down, and Duke will continue to trade up. Not every game is going to obviously create a fully engaged market in the conventional sense. But there's certainly incentive for someone to play strategy and say, you know what, maybe Duke gets out to a slow start and they're down 16-4. How much buying is there potentially going to be on that underdog team? Maybe it moves the price from 5 to 7. And there's a market right there, right? I mean, that's almost 30-40% of ROI if you're able to buy those 5s and sell them at 7.
Yeah, that was going to be my next question. So you could do what we would call like intraday trading. You can trade. I could buy the 5s. It goes 6 bid. I could work 7s.
Exactly.
Gotcha.
Yeah. So, I mean, there's lots of layers of strategy that we think will ultimately surface around how and why you want to buy certain teams. One of the interesting things we've seen in some of our tests is when a team is down big at halftime, you'd expect to see that team sell off. Instead, you see that team buying because people think there's value on those shares. So you get the opportunity to have a big comeback, and you're able to get, a relatively attractive ROI on that trade.
You could be actively trading throughout the whole game.
That's the goal. That's what we're hoping people will enjoy it enough to be able to see all these little nuances into the game and how the market reacts, because it's not going to be enough just to trade the game, which is what I tell people is you want to trade the market. So anyone can really appreciate when stock gets overbought or when something gets oversold. It's still fear and greed. The Patriots go down and score a touchdown. Well, everyone starts buying the Patriots. Well, at some point, that price is too high at that point in the game. So what you start to see is people selling, people taking profit. It's funny when you see a conventional bear market chart where you have it rip up and then you have it pull back a little bit and then continue its trend up. The same thing happens in our markets because people are taking profits as these events are occurring.
I'm just going to be hooked to this during the NCAA. I mean, I got to tell you, it's already enough action with watching these games. This is really cool. So several more questions I have.
Yeah.
What's the account minimum for somebody to get involved?
So right now, like I said, we're doing a completely free-to-play model. So if anyone wants to come in, check us out. It's completely free. We're giving away money for people who want to come on and be successful on the platform. Our goal right now over the next 30 to 90 days as a company is really just to invite as many people that we think would appreciate this type of concept onto the platform. And then from there, look to secure funding to begin to bring this out to a much broader audience.
I noticed on the site that there's a members button, and I was curious, does everybody have to become a member of BallStreet Trading to trade this, or can you come in and just trade one game?
Yeah, so we have there are two basically paths that we give users. One is you can come in as a guest and you can trade. We give you full reign to come in and trade the markets. You're just not eligible for any of the prizes that we're offering. If you want to come in and fully register your account, become a member with us, it's totally free. We'll then create an account which is eligible for the prizes that each of those contests would offer.
What are some of the prizes that are being offered right now?
Anything from $2 to $10 per player per contest is where we're at right now. We're in talks with a number of bigger brands to begin lining up some promotions where those brands can offer specific things centric to them and those experiences away from the app. And we hope to hopefully in the next couple of weeks begin to turn some of that stuff on, whether that's free drinks at your local sports bar or coupons to something like Nike or Titleist. For us, it's really creating the best partnerships that we think could leverage the ideal players that we hope to bring in onto the platform.
So I want to go back to the regulation side of this just for a moment, because as this grows and you get the traders in there that you want, I'm curious, are you going to be faced with some gaming regulations, and ultimately, how is the IRS gonna classify this?
Well, I think as far as classifying it as income, it would be any type of money that you would win as a contest. So the threshold as far as the IRS would be around $600 that they would have to claim. As far as broader regulations, when we talk gaming, specifically around sports, I think you're asking about PASPA and the repeal of that happened this past summer, which decriminalized or basically created the ability for states to offer gaming, specifically on sports. And what's really happened is each individual state has now gone through the process of either accepting that or not quite fully adopting. And all those individual states have their own set of rules on what they define to be gambling or what type of licenses a specific operator may need to offer that type of gaming in that state. For us, using the method of free to play, we remove ourselves from the definition of gaming in a legal sense because there is no risk or consideration that the players would have to put in to play. Beyond that, the big real hook with all of this is a skill-based game. So something like chess, which requires skill, which would be clear that the more skilled player in a chess contest would win much more than not. It's the same feature that we are really trying to focus on with us, in that if you are an experienced or if you are someone who is skilled at trading markets, you're certainly going to have an advantage, at least at the beginning, before everyone else gets up that curve a little bit who might not have as much experience. But there are so many decisions that have to get made. Those players that will be rewarded ultimately be the ones who make the most correct decisions. There's no one single decision in our market, much like any other market you would trade, that will ultimately get you a positive outcome. It's the culmination of many good decisions over a longer period of time. For us, we just so happen to be creating markets that are going to be 3 to 4 hours because we're basically going to be going along the clock with a real-time event. And I think that part of what we do is really create volatility in a box and give that to players as our product for people who want a little bit more of being a part of the event that they're watching, as opposed to locking their lineup for DFS or locking their lineup for regular fantasy, or even putting a conventional bet on for a team to win before the game starts. Once the game starts itself, there's really nothing more people can do other than maybe text their buddies or put out what a terrible play that was on Twitter. We're now creating an opportunity for those players to basically compete against the crowd and be a part of something bigger. A market with 5,000, 10,000 people trading the Yankee game, that's a powerful thing. How interesting is that then in a year or two, if we're able to be successful, that people are going to watch the game? Oh, it's 3-2 Yankees. Well, what's it trading? And people then are looking at their phone and figuring out, oh, well, Yankees are trading 57. Red Sox are trading 43. And that's the conversation that we really want to create, because it's an extra level that it's tangible for the players. Like, do I care that the Yankees win? I guess, but I'd rather be a part of buying Yankee shares as they slowly load the bases, and then Aaron Judge hitting a home run and seeing that market rip 10%.
Yeah.
How fun is that?
It reminds me so much of watching how the day has gone and then making a trade on the close. And, in this situation, you look at it and go, who's up next? Is it the top of the order? Is it the bottom of the order? How has this player been hitting against the pitcher that they're about to put in? There's just so many different things you could look at to determine how the market will trade.
Every little thing that happens is going to create some sort of game event that should trigger a reaction in the market. And it's up to you as the trader to interpret what's happening in the game, and then putting that in the context of the market, become either a buyer or a seller. There's so many of these little nuances that we learn along the way, and it's really been great to figure all this stuff out. Like something along the lines of third down trading in the NFL. Are you a buyer of the defense or of the offense? Because if you sell the team with offense because you think they're now going to have to punt because they're not going to convert, that's a trade. If you think they're actually going to convert the third down, you should be buying because they're going to be much more likely now to get closer to the end zone to get that big pop that the touchdown ultimately will produce.
We talked about baseball, NCAA. You just mentioned the NFL. I feel like those are pretty self-explanatory. I understand how someone would go in and trade those markets, but I'm curious about golf or even tennis. I watch a lot of golf, and one of my favorite tournaments coming up is the Masters. And something that I think could be pretty interesting is if you have a player that really maybe to start the event doesn't even have a market because no one even thinks they have a chance,
Yeah.
And all of a sudden they're leading after the first round, and then they could become the most volatile market, the most traded market. Explain to us how individual sports work.
Yeah, so we're going to be doing the Masters. We're going to be doing, at minimum, all of the majors this year for the PGA. So for the Masters specifically, we're going to open markets on that Saturday. So we're going to have probably between the 10 or 15 people on the leaderboard with a field option just to ensure we capture all of the eligible players to win the tournament. And to your point, if you have players that are 6 strokes back, they're probably going to be trading around $2 or $3. But if you have Tiger Woods with a 4-stroke lead, he's probably going to be trading closer to 20, right, on that Saturday. And as players begin to fall out of contention, you'll see those stock prices sell off, and you'll see all of that volume begin to hit those players who are really in contention to win the overall tournament. Golf, we think, is going to be one of those dark horse products for us because golf is a slow, methodical game that we think goes perfectly with this type of market. It's not anything you need to immediately get in there and buy and sell. You can let the tournament slowly come to you, whether he gets on the green or he puts it in the fairway. You can now make a decision how or slowly get yourself into that position because you want to start accumulating Rory shares. You want to start accumulating Jordan shares. 2 years ago, we had a beta test during the Masters where Jordan Spieth had that 5-stroke lead, and then he went into the water a couple times on 13. So at the time of that market, Jordan was trading around 92. He went into the water a couple of times, and by the time he left that hole, he was trading at 42. So it was wild to see this market completely melt because every time he went into the water, that was obviously the penalty, and people just started crushing bids like crazy, and you just saw this free fall. And that was one of the first light bulb moments for me. I'm like, wow, we could really have something here because that was a lot of fun.
A question I have about, let's just use Tiger as an example. Right, he's going to get a lot of push higher if he is in contention because not only are people voting because they think he can win, because a lot of people are probably going to be voting because they want him to win. So he's always going to have, I think, a little bit of a premium, a guy like him. Yep. How can I short that? What if I think that, Tiger's all of a sudden he's at 98 or 97 or something, and he's one back at the Masters? I look at this and go, you've got 4 guys ahead of him. I'm wondering, do I have to bet all 4 of those guys, or can I just bet against Tiger?
So you would presumably, you're going to have shares of Tiger to start. So you either have the option of now selling those Tiger shares because you think the price of Tiger is way too high relative to where you think his percentages to actually win the tournaments. That's one way that you could remove Tiger risk from you because you think the market is overbought. On the other side of that is you would just begin to get long some of those other players that you think are undervalued at the time, because if all of that money is rushing into Tiger, we've created an ecosystem. So if people are overbought, that means other people are underbought, and there's value in those other names. The idea of shorting is certainly something that comes up a lot, and I think it's something down the road we'd look to implement, but we're still trying to create an approachable market experience to where the guy off the street who we're asking to now trade a live market can understand. And I think being long only is an easier step to take as opposed to now introducing the ability to short, which is a relatively complex component to markets that I think will take some time for us to have an educated user base to begin to slowly roll those things out.
Scott, I'm loving this conversation, man. It's so cool because we've got futures all week long. At night, we've got sporting events now we possibly can trade, stocks, crypto. I mean, why not? This is, I think it's a great idea, man. I really, really do.
I appreciate it, man. We're super excited, and we hope that those people that I think are really going to enjoy this get an opportunity to see it, feel it, and even give us feedback, whether they the things that they like about it or the things they'd like to see, or even if they hate it. We're open to hearing any and all criticism, because for us it's about making this as approachable and as interesting a concept. Because like I said, I would love to see in a couple of years that you ask the score first, and then you ask what the price is.
I love the whole thought process behind this, Scott. Really great stuff. We're not done yet. I've got some rapid fire questions next if you're ready for those.
Awesome. Let's do it.
All right, everybody, our rapid fire segment is sponsored by Trading Technologies. Access the global markets from virtually anywhere with TT. They are the world's fastest commercially available futures trading platform. And now you can trade cryptocurrency spot and derivative markets side by side. For more information, please visit tradingtechnologies.com. Scott, what trader has influenced your life the most and why?
I would say, does Michael Milken count as a trader? I did my senior thesis paper of him in high school, and he was the one who sort of opened my eyes to what Wall Street was and gave me, or at least was the bug that pushed me into that direction, that, hey, Wall Street is a sexy place, and let's get in there.
What was one of the hardest things for you to overcome in trading?
Probably bankroll management. I think everyone has this idea of these huge trades or these huge moments that are going to define everything. And I think that you think of that initially in a positive way, that you're going to make this one big trade that's going to propel everything forward. And I think the opposite is true, that you're much more likely to have that one bad trade that was going to set you back in a big way. And if you're able to methodically think through how you're going to take risk and look at your bankroll to really define those steps, it's an important thing that traders really need to understand and put to use.
How has your trading process evolved over the years?
That's a great question. I think I'm a little bit more mature now, so I think I'm probably not taking those big all-in chances anymore, and it's more about methodically building momentum and just making lots of good decisions over time that hopefully will pay off in the longer run.
What is one attribute that you believe every trader should have?
Humility. The markets will chew you up and spit you out every chance they get.
Favorite book about trading?
The Big Short.
Favorite movie about trading?
I would say The Big Short too. I mean, I lived through it, and it was amazing to see how they took a relatively complex subject like that and really made quite an entertainment movie about it. I thought it was excellent.
What's the best piece of advice that you've received about trading?
The best piece of advice? Understand what you don't know. I mean, experience goes a long way, and even someone who has 10, 15, 20 years, if you're not continually trying to learn, you're dead, because everything in this world is moving so fast and changing. Once you think you have it, I promise you don't.
If you could go back in time and give the younger you a piece of advice, what would it be?
Go into any other asset class other than mortgages.
If you had an elevator pitch me your edge in trading, what would you say?
At this point, I think experience with a little bit of a gunslinger mentality that is going to make us a lot of money or get us both killed. So you want to come for the ride? Let's go.
Last question for today. Favorite thing to do when you're not trading?
My wife and I love to cook and love good wine. So, it would be probably traveling to great places that have great food.
My kind of guy. Scott, where can people find you on social media? Let's do Twitter and Instagram. Everybody, I'm adding Instagram now because I'm on it, and I want to know if other people are using it like me. So, and also give us a website.
Yeah, sure. So the website is BallStreetTrading.com. We are in Google Play. We are in iTunes. We also have a web app if you want to play on your desktop, sitting at home, relaxing. As far as social media, we're at BallStreet App on Twitter, at BallStreet App on Instagram, and me personally at BallStreet CEO on Twitter. We'd love to hear from everyone, and anyone who has an opportunity to check us out. We're running tournaments for the NCAA, the Masters, and in April, we're going to be doing a Game of Thrones market, basically allowing traders to trade whether characters are going to live or die.
Scott, this is all so cool. And I waited till I spoke with you before I went and signed up. So I'm definitely going to sign up. So you definitely got one trader out there from this conversation that's going to go and join. Scott, thank you again so much for joining me on Futures Radio Show.
This was great. Thanks, Anthony. Really do appreciate it.
Thank you for listening to Futures Radio Show. If you have any questions or comments for myself or my guests, please visit futuresradioshow.com and sign up to be a premium member for free. If you enjoyed the show, don't forget to leave us a review on iTunes.